Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching in Simply Stocks. And I'm here with another video, and hopefully, the series of videos should continue from here on in. There were a lot of issues at home and a lot of things going on in my life, and that's why I was not able to put up videos on a regular basis. Hopefully, inshallah, from here on in, over the next 4 or 5 months at least, the videos on markets and market analysis should continue. So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position or any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSE, and that I'm not a portfolio advisor or anything of that officially. Whatever I discuss here is purely on my education and on my background, plus on my experience of the last 12, 13 years being into this market, that I have been able to do trading and investment over that period. So I want to share that knowledge with you all. So before I talk about the markets and a particular company that looks good on the basis of the numbers that it has produced, here's small request that kindly support me on Patreon. Once you do that, have go to the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time, and on markets, on businesses, and on economies. So there'll be discussions on domestic and global economies, how have been the GDP numbers, etc. There'll be a set of watch lists, which is actually my portfolio, because my portfolio extends to around 30 to 35 stocks in itself, and all your queries will be answered. So you can become a member on Patreon. The link will be in the description. So let me just take you to the screener website, and this is the you can say the stock I'm going to talk about, Epack Durables, over a course of time. But first, we'll discuss about the markets, and then we will come to Epack Durables in details. A very interesting small cap company discuss with you. So about the markets have been doing well, and what we have seen is that mid cap, small cap, large caps, they are moving over the last 15 days. They are in July, the movement have not been that great. In the second half of July, there have been up and down movement. But overall, I believe that in August, we have seen a good recovery for the market, and we've seen Nifty going to 25,200. So we'll discuss all about the valuations at the moment. Markets are at 25,200 at the moment. So if we see here, Nifty dipped between 1st of August till 5th of August. It showed a downward trend, and we had a correction of around 6% on the Nifty, and then the recovery began. So basically what is happening is that there are a lot of naysayers that are talking about Nifty being expensive, that are talking about the valuations of this market are extremely stretched. But I feel that we could see this run continue at least for the next 2 quarters. And in that sense, I believe that if you have bought into stocks somewhere around here, which is around the budget, you can say the election time, and if you have shifted to companies which are more export oriented, say IT, pharma, more consumer stocks that have, you can say, a touch of export orientation to it, plus the companies that are into consumer related segments, then you're going to do extremely well, and you would have been doing well. And I think this run up could continue for at least 1 quarter, if not more, till December, etc. Companies which are into defense and PSU related companies have underperformed, and it looked like the same as things panned out from May, June onwards. So we saw the HALs of the worlds, and there were the BEL, BDL, etc. underperforming from June onwards. So that is how the texture of the market is, but I believe Nifty is headed higher. So let me just discuss about the earnings of the Nifty. So if I open up, say, Nifty 50 on screener, will also know about how the earnings are currently and where is the Nifty on the valuations front. So we'll get this thing out of the way, because there have been a lot of talk of the markets, expensive markets, cheap, some segments are cheap, some segments are expensive. So let me just talk to you about Nifty per se. So this is the Nifty chart. If you look at the PE ratio, the Nifty is currently trading at a PE of 23 and a half. So the Nifty is trading at 23 and a half. Historically, what has happened is, if you look at a 3-year chart, Nifty normally has traded around 22 times. So it's not stretched. Yes, if you look at pre-COVID levels, if I stretch this to 10 years, then Nifty, again, if you see this, it's 23 and a half, which is the average. This is because markets have traded at 28, 29 times. If we take out this factor, then I would say that Nifty normally used to trade at pre-pandemic used to trade at 18, 19 times, and today it is trading at 23, 24 times. But if you look at the Nifty earnings as well, pre-pandemic from 2013 to 2019, the earnings growth have been around 5 to 6%. And then now the Nifty earnings growth, which is projected to be in the next 2, 3 years, even with a guided lower GDP print that has come in, I think I would say that the earnings could grow between. So if the GDP growth, say if it is 6.7 this quarter, and we end up being at 6.8 for the year, I'm not even saying 7.2 or 8 or anything, and we include the inflation at 5.2%, that's around 12% if we include 1% for margin expansion in some of the companies. So 13% earnings growth is very much possible. Currently, the Nifty earnings, if I say 23 and a half is your, you can say PE, and the Nifty is at around 25,200, and we are trading at 23 and a half times. Nifty earnings is around 1070. If I say 13% on this, then we are looking at somewhere around 1200 rupees. 1200 rupees earnings for FY25, because only one quarter has passed by. So we believe that around 1190 to 1200 is for FY25 the earnings should be. And for FY26, that's 1.5 years from now, the earnings should be around 1350 rupees. At 1350 rupees, the markets are not expensive at all. So even if you have a 2 to 3 quarter time horizon, the markets are headed much higher from here. Now people are talking about the fact that that small cap and mid caps are expensive. So let me just take out BSC small cap index for that matter on the screener website, and let's see how that is panning out. So if I take out small cap index on screener, then you'll have an understanding that it's not expensive at all. So if this is your small cap 250, and if I take out the whole BSC small cap index on screener, let me just take that out again. There's some issue, so let me just search that again. There are some issues with the laptop itself, and that's why things are not aligned at the moment. But if you see here, 56,000 is the small cap index, which it is trading at 35, 36 times, which is stretched, because if you see from a 5-year point of view, you'll see the average has been 35. From a 10-year point of view, the average is around 42. So PE from a 10-year point of view is around 42. From a maximum point of view, the PE for the small cap index is normally between 30 to 34, 35 times. If we see from wherever point the small cap index was there, the average has been 34, 34 and a half times, and this is exactly where the BSC small cap index is trading at the moment. So again, it's not ultra expensive, it is fairly valued, and just about some of the sections of the markets are expensive. And that is why I believe that so long as people talk about a fall in the market will continue to make new highs. So over the next 2 quarters, I believe that this rally should continue both in the larger stocks as well as in the smaller stocks. The problem is with the mid cap stocks. The mid cap stocks have run up a lot, and there could be a situation where companies which are of the market cap of 50,000 to 1 lakh crore may just struggle to move up over the next one or two quarters. But otherwise, there are many small cap companies that are coming up with very good numbers. So one of them is Epack Durables. Epack Durables is a small cap, you can say, consumer durable company, 2,500 crore market cap company. It is making new highs or closer to new highs. It is at 253 rupees the stock is trading at. So let's see what the company does. So basically, it was incorporated in 2019. It is an original design manufacturer, ODM, of room air conditioners. So basically, they make air conditioners and they sell it to all these brands that we talk about. And so Epack Durable Limited is the second largest room AC conditioner manufacturer in India in terms of number of units, specializing in room air conditioners and related components. It has 24% market share in domestic manufacturing, you can say, industry. And so if you look at clientele, then Blue Star, Daikin, Daikin air conditioners, Carrier, Voltas, Havels, all are there. You can say Hire, etc. are their customers, and they have been doing extremely well in this business over the last 4 5 quarters that we have seen. In terms of revenue concentration, the top five companies account for 80% of their revenues that have come out. So the IPO came out just about a year back, not even a year back. It was January, I would say, that the IPO came. And so if I take this out, so yes, it was around January that the IPO came, and now the stock is making new highs. The reason for that has been the numbers. So if you look at in March 22, they did 920 crores. In March 23, they did 1540 crores, which is pretty good with 7% margins and 32 crores profit. In March 24, the sales dipped. So over this period, the sales dipped, margins expanded. So profitability slightly moved higher. But this quarter has been pretty good. 770 crores of sales versus 440 crores. Profit has jumped exponentially. 30 crores has become 52 crores. That's operating profit. So this has gone up 70-75%. And you can say net profit also from 9 crores has gone to 23 crores. So that's 2.5x. So 23 crores of net profit in one quarter versus 35 crores of net profit in the full year last year. That is what has made the stock move higher in such a manner that the stock has moved all the way from around 160 odd levels to 250. But I think if this trend continues, the stock would perform even better from here. In terms of balance sheet, there is debt on the company, but that is getting reduced. If you see, 520 crores has become 386 crores, and it will reduce even further post the IPO funds that will be used. In terms of shareholding pattern, 48% is with the promoters. FII hold less, so around 1%, less than 1%, but DII holding is around 16%. Public shareholding is around 35%, and let's see if there are marquee investors in public shareholding. So Augusta Investments, Zero PTE holds 11%. So majorly free float is around 24% on the stock. It is a small cap company, so kindly be advised that this could move 20-30% in a few days here and there. So I believe that the air conditioning segment could continue extremely well over the next 8-10 years. So you can look at the brands itself like Voltas or Blue Star, but you can look at ODMs, design manufacturers as well. We have Epack, we have other companies which are listed as well. But it looks good. We have Dixon as well, which makes those products along with other products as well. But here the valuation is not sky high. It's not 100 PE that we are looking at. And if the trend continues, I think if the numbers continue to be like this, we could see a decent uptick on the stock, even going further from here, because I believe that if you look at it, it was 3.7 rupees EPS in March 24. I think they're going to do much better, probably around 5.5, 6 rupees of EPS. Based on that, the stock is not very expensive. So this is something to look at. Again, you take your own call in terms of analysis on the business, and then probably put in your money, and don't just go by my analysis. In terms of technical analysis, if you want a little bit of view on it, then it had a slight breakout around here. This was around the start of July, and the RSI went up sharply towards around 78.80. It made a high of 268, and then it has consolidated, and over the last 2 3 days it has dipped a bit. Your support lies around 244, 245, very close to support. If it breaks, we are headed much high, much lower from there. Probably 230 is where we are looking at. So 245 and 230 is your support. Probably it would be better off if you accumulate there, starting from here till those levels of 230, 235. But overall, from a 2 to 3 quarter, even from a 1 year point of view, this is looking very interesting. So this was a video on Epack Durables and the markets as well. Please do like and subscribe my channel and hit the bell icon so you get my video straight away when I post it. And kindly do support me on Patreon. If you can do that, you get a lot of queries answered there, and you get a lot of stuff with different podcasts as well. Thanks a lot for watching.